This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and for today's video, I had a question on identifying big reversals. All right, so I'm going to show an example on a single stock of a big bottoming reversal and then actually a topping reversal. I'm going to show you the differences between the two. Should be a good exercise. Now, if you want to learn more about some of these techniques that I'm using, you can start with the book. It's at rabilstockresearch.com/book. And then also, if you do like this content, please hit that like button and also subscribe. Okay, so I've got a chart of applied materials up. I've got the monthly on the left and a weekly on the right. All right, now I want to go back in time and show this bottoming pattern where we went through a bear market in 2022 and then turned things around. All right, so this reversal, and there's a couple of different ways and things we have to look at with respect to the way this plays out. We're going to use MACD and we're going to use ADX in these situations to identify the severity of the decline on the monthly chart, and that's going to help us identify how aggressive we want to be on the weekly chart when we're looking to buy the reversal. All right, so let's just start with the monthly. We break the 18-month line in the second quarter of 2022, and we come down to a rising 40, which we actually end up breaking. Now that line stays rising, and then we get back above it, sort of test it, and then get things turning here. But through this entire decline, if you notice what took place on the monthly MACD, we were just really stretched away from the zero line. All right, and all we did is work our way back down to the zero line level and then start turning. All right. The other thing that we can see is that through this decline, we had really strong ADX based on the buyers. The green DI was in command during this phase here. And then as we started dropping, the red took over. All right. The red, we got a crisscross here and the red took over. But notice how it didn't really take command because it couldn't get above the 25 line. So even though this was a severe drop, it never really overtook the buying strength. And what that means to me is that you would still have an upward bias when you're looking at this pattern. You would look at this as this move was a lot stronger than this move. All right, at least the way that it registers in the ADX, and that's how we're going to use it. All right, this is right out of my course. I go through this in detail. All right, now if you look at what took place after that, we made a move up, and we still had a declining 18-month. We were above a rising 18-month, and we also obviously had improving signs with the MACD turning and the fact that there was no strength in the sellers. And then in early 2023, green came back above the red. And when you have that situation where red doesn't overtake green, then green crossing back above is actually a pretty strong positive. All right. So we had that take place. Now, that's sort of the backdrop. All right. Now, what I want to do is take a closer look, and I'm going to leave this the left chart up for now. And what we're going to do is we're going to recognize, while this is dropping, the fastest way to see a reversal is through the price action itself. All right. It's not going to come from the indicators in most cases. All right. Now we have this as an anticipatory sign, and this is an anticipatory sign because we know on the last drop, right? This is before it even turned. We know that there wasn't that much strength in the sell side on the longer term chart. All right. So we have that in our back pocket. Now, when we're looking at the weekly chart, we're looking for a reversal pattern. All right. The reversal pattern would be where we break the downtrend line, which we did here, right? But then we immediately drop down and hit a pretty significant new low. So I wouldn't consider this a test of that low. I think this dropped down too far. So we end up breaking that trend line. So we make a new trend line because this is the lowest low, and we come back to the prior peak before that, and that's our anchor point. And we draw our trend line. All right. Now, during this bottom, we had a few things that developed. That number one is that we got our first sign of momentum loss to the downside in the MACD. Now that did not show up in the ADX, but it definitely did show in the MACD. And then if you notice what took place is so let me put the trend line back up. We crossed that to the upside, and then we came back and tested here. All right. So the 1 is breaking the trend line. 2 is the test. Now the test can take it can take shape in 3 different ways. We can have this low completely tested where price comes down all the way down and test that low. All right. That's one way it could play out. The other way it could play out is that it comes down so far that it actually undercuts it a little bit. It just comes down slightly below that. All right. And then the third way is we can retrace, but not really come all the way down to that area. Now, I say the minimum retracement needs to be about 1/3 of the decline. This met that clearly. All right. Now, the other thing I like to look for in those cases is I like to see a test of the 18, especially if it's cupping around like this. So I like the 2 to have this sort of shape to it where we go up and then we come back and we test the 18 week, right? And we clearly get at least 1/3 of a retracement back. Now look at what's taking place in the price action. We make a move down, we rally up, we come down, we rally up, we actually exceed this peak. So we went from a new low swing low, to a new swing high, and then we come back and we make a higher low. I mean, that's a very attractive pattern when I look at it this way. I know that this is a little bit of an anticipatory signal because we need to take out this high to confirm the reversal, but I do like to look at this. Now, here's the key. If this takes place while this chart is in an uptrend, then the buy is right here. We can be really aggressive. In fact, we could be even more aggressive and play the divergence pattern off of the reversal and play it down here if this is in an uptrend. But we can see based on everything that's taken place that this is not in an uptrend because we're below a declining, right at this point here, we're still below this declining 18-month. We're kind of lifting off here in early 2023. This is beginning of 2023, and we haven't gotten through the declining 18-month yet. All right. So in this case, I actually don't want to be as aggressive in this case because I'm fighting the bigger trend. All right. I hope this makes sense. If this, in fact, were already above, let's just draw an 18-month and say this is what the 18-month looked like. If that were the case, let me do that again. 18-month is here. Then I know that I've exceeded the 18-month and that's actually acting as support. I can play this off of this low because I have the bigger picture pattern in my favor. All right. We don't have that here. So what would make more sense is you draw your trend line in, you get your 1, you get your 2, and you get your 3. 3 is coming back up through this high right here. And then we play the first pullback and higher low. All right. So this is basically our 0 line reversal as we come back into the zone and test the 18 and the 40, which are now rising. Okay. And that is where this line is now being tested here. Do you see how we exceeded that line and we came down and tested? And then as we turn up from that around 125 right in here, maybe a little before, we have the confirmation in 2 consecutive time frames that we are reversing the trend. And so this is confirmed evidence when we get the 3 and then we come back and we make the higher low because we're making our second higher low here. We've already made a high here and then pull back and make a second high here. So once we make our second higher low, we have confirmation that the trend has shifted back to the upside. All right. We also have confirmation with the MACD getting back above the 0 line. And notice also what's taken place here. Red was in command here, and now green has taken over strength. We have pretty much everything in our favor at this point. Now, there are times where you might want to play the divergences and be more aggressive and play this. And what you could do is say, okay, I know that I've got room at least to the 18-month. All right. And what I can do is move up to that 18-month line and maybe take some partial profits and leave the rest on, maybe put a stop here. And I know I'm at least at a small profit. And then if it breaks through, then I can trail the stop and make a bigger win and, starting from a lower point. All right. But in most cases, what I'm going to do is I don't want to fight the bigger trend. I'm typically going to play, I'm going to play for a little bit more confirmation if I'm fighting the bigger trend. And I'm going to be a lot more aggressive if I'm not. Now, I like this as a trading play, this divergence signal, all right, and say, you know, I might play that as a trade and say, all right, my target is basically the 18-month line in this situation, but I'm not necessarily playing it for a full-fledged reversal all the way to the upside. All right, let's zero in on this last part. Now, if you look at the way this topped out, it was a sort of a spiky high, made a big move up and then reverse. But if we're following our procedure for drawing trend lines, we know we broke the trend line here, and then we rallied up and we came back down, but we didn't make a new low. You see that? And then we came back up and tested this area again, and then this big red bar here took out the low. So that was the 3. So let's just draw this in. This is the 1, all right? 2 is the test, and we had 2 of them testing the high, all right? And then we came back down and took out this low. Now we have confirmed, I wouldn't say confirmed evidence, we have presumptive evidence that the trend has shifted to the downside. Why is that? Because we pretty much need another lower high and another lower low. We've only made one lower low now, right? So we need to do that one more time to confirm a bearish trend. But I want to show something that I think is key here. This was a bullish this was a reversal to the upside. Even though it was below the 18-month, we had the MACD above the 0 line, and we were showing no real strength in the sellers. So sellers were not in command, and the severity of decline was not that bad because it was above the 0 line. Now we're looking at a reversal to the downside, but this is well above the 0 line. We're still above the 0 line. Right? We're not breaking. We're not on a bearish trend. We are on the monthly chart. We're basically creating a reversion trade. You see what I mean? This is different. This is not the same as going long here as going short here. To me, if I'm playing this to the downside, I would probably be a much more quick to take profits. I would be looking for, using the shorter term time frame daily to enter and exit, because I want to be a lot more nimble in this play. I'm not completely convinced that this is going to fall apart and start a bear market, right? Whereas when we were turning here and this was still in good shape and we still had pretty good, overall balance between the MACD and the ADX in terms of bullish side dominance, I would be more inclined to play this as a reversal play, whereas this, I'm playing it more as a trading play back into support. Okay, hopefully this makes sense. Let me know if you have any questions. Thanks.